The Dow closing at a new high, and our next guest says she expects another leg higher in the value and reopening trade. I want to talk markets right now with Mona Mahajan. She is the portfolio manager and senior U.S. investment strategist at Allianz Global Investors. Good morning, Mona. The question I'd ask, and I know you think that there's still a leg higher, but when you start to think out 6-12 months from now, I think you also think that economic growth is going to be materially slower than it is right now. And so whether that's already baked into the market.
Yeah, absolutely. You know, look, I think the markets tend to be forward-looking 6 to 12 months out. And we've seen that certainly since March of last year, when we've had a phenomenal run in the S&P last year, up nearly 70% off the March lows, in an environment where you could argue wasn't so healthy in the economy. Now we're starting to see really robust numbers coming out of economic figures as well as earnings figures. And we're really starting to see a little bit of stagnation in the markets. So again, we're thinking the markets are looking out. What will this environment look like 6 to 12 months from now? Well, certainly we do think yields could continue to grind higher. Certainly the Fed may start talking about tapering assets and even implementing some of that tapering process. And of course, you know, when you're looking at earnings and economic growth in the U.S., we could be facing a peak quarter in Q2 this year. And so while we do think economic growth will remain above potential for the next few quarters, certainly that second derivative or the rate of growth will slow. So, you know, in that backdrop, we would expect at least markets to think about maybe, you know, what works in that environment. And certainly we think
so let's talk about about what works in that environment and what may not work in that environment.
Yeah.
You know, we've talked about the Great Rotation, but I don't know if the Great Rotation really, I mean, the Great Rotation may have already happened if it happened at all. Is there a second rotation to be had?
Yeah, you know, we think now this the second part of I guess, the recovery trade, you have to be a little bit more selective. You have to be a little bit more active. A big part of it has been done, and it's, you know, it's been traditional that in a reopening of the economy or a recovery in the economy, you see these cyclical value stocks outperform, and we've certainly seen that since November of this year. But in the environment where yields could continue to go higher, the Fed is looking at tapering and potentially raising rates down the road. In that environment, we think areas like financials continue to work. They work well in a higher yield curve environment and higher rate environment. And, you know, generally speaking, we think, you know, the Biden administration has laid out a pretty aggressive agenda, and that supports areas like industrials and certainly areas like energy and specifically clean energy. And so we're being a little bit more selective where our convictions lie here over the next 6 to 12 month period. We do think if you do get some drawdown over the summer months, which, you know, keep in mind, we haven't yet had a 5 or 10% correction in the equity markets yet in 2021. So, you know, that may be happening, or it could be coming to fruition in the next quarter or so. But if that does happen, we think, you know, think about where the convictions lies, what the environment will look like 6 to 12 months, because that's what the market's going to be doing.
What do you do with the big tech names still in this environment? They represent so much of the S&P, as you know. And I ask only because, and some have not been outperforming lately. Just, you know, we've had a sort of strange little situation right here. But are we tapped out? I mean, you sort of have two sides of the coin. You have Etsy coming in with numbers, or at least expectations that things are going to get worse in the e-commerce land. On that side, I don't think people have that same expectation about an Amazon. And then you get PayPal, you know, through the roof. And so there's sort of these different versions of digital right now.
Yeah, absolutely. Look, we think it's telling that a lot of these companies have reported phenomenal results this quarter, and they haven't really seen much price action after that. They've been kind of flat, sideways, some of them down. And it kind of talks to a little bit of fatigue in the market, a little bit of a rotation that's now being really bought into by not only retail players. I think institutional players are starting to buy into this rotation. We do think, however, on a longer term basis, if you're a 3, 5, 10-year investor, a lot of these secular growth themes are here to stay. So areas like, you know, the transition to online retail, cybersecurity, the cloud businesses, you know, 5G is an area that we think could actually continue to do well this year because it's part of the Biden infrastructure package as well. Certainly, we think if you get a real correction in that space, it is an opportunity for longer-term investors to get involved. We think it's important to have that balanced portfolio, but just keep in mind, this year may continue to be the year of value. And so, you know, position it that way.
Shepard Smith here. Thanks for watching CNBC on YouTube.